So, this is the video that a lot of people have been waiting for, which is about how to live off of your Bitcoin without spending any of it and without giving any of it away and without purposely screwing your future generations over by getting rid of the toughest asset, hardest asset humanity has ever created. And if that's what you're interested in, figuring out how to borrow against your Bitcoin, figuring out what the options might be, figuring out what the safe ways to do it are, then this video is going to be for you. And if that is what you're interested in, then I would implore you to please subscribe to the channel, because it's very important. The faster you subscribe, the faster YouTube helps me in my mission to get the message of Bitcoin out there to the people that need it the most. Now, saying that, let's talk about why somebody would want to do this. Well, firstly, if you are considering this, it means that you are finally understanding what this asset is. Because a lot of people's strategy to deal with Bitcoin will be to liquidate a portion of their Bitcoin at a certain time in order to live off that until the next cycle comes around. That's a decent strategy, and I understand it, and I understand why that's been relevant up to now. But there are smarter strategies. You know, we are now, the type of buyers that are coming into this market now are people who never ever let go of assets. I'll tell you why. Because they've had a lifetime of beating themselves up and being ridiculed by their peers about missing opportunities. These are the buyers that are coming into the market now. The hodlers and all of that stuff, the OGs of Bitcoin that, you know, understand Bitcoin and figured it out are cool, but these buyers are relentless, right? It's cool to say, okay, I got into Bitcoin at a, you know, in 2011 or 2010, and I've been hodling ever since. And that's fine for the number of years that we've had. What's cooler is somebody saying, you know, in 2023, I got into Bitcoin at $15,500 a coin. And in 2130, their grandchildren turning around and saying, oh yeah, my great-great-great-grandfather got into Bitcoin, and we hold it, and it is, you know, a family asset. It is a generational asset. That is the type of buyer that's getting in now. And of course, if you own these assets for that long, you need to figure out a way to generate liquidity on those assets. And you don't generate liquidity on assets by selling the assets. That's the amateur's way of generating liquidity on an asset. Now, it seems like this conversation is very much desired, and it's going to go in a little bit of an interesting direction. So I want you to stick through this video with me so we can actually have this conversation to completion. Because it seems like everyone, as soon as Michael Saylor said, you know, you just borrow against it and then you refi on that, everyone wants to do that. But not everyone can do that, and most people will fuck themselves up completely by trying to do that. It seems like humanity is quite interesting. It seems like as soon as we get something good, we want to figure out how to screw it all up as quick as possible. You know, I have a friend who recently got to, you know, his first Bitcoin, and he's almost at his second Bitcoin now. And the first thing he starts doing is thinking about what other opportunities there are in the Bitcoin space. And he's already talking about putting his Bitcoin up as collateral to build those opportunities. And I had to, you know, verbally and kindly slap him upside the head to realize Bitcoin is the opportunity. I don't invest in any Bitcoin startups. I don't invest in any Bitcoin, you know, companies that are being built. I don't buy pieces of fucking Bitcoin art. I don't do any of that for my Bitcoin. Bitcoin is the opportunity, not the ancillary things that people want to maybe create that might turn into a success. It's already hard enough to predict and ensure that you're going to create a success from, you know, businesses that have track records. You want to try and take a gamble on your Bitcoin, you know, in in opportunities that don't even have a track record in a new and emerging market, I think that's stupid. Now, do I think it's important for venture capital to go into Bitcoin? Absolutely. But not my venture capital. Not mine. I'm gonna wait for the VCs to get involved and dump their clients' money until their clients realize that, you know, we need Bitcoin and not this VC private equity returns, and actually just holding on to Bitcoin is better. At some point, will I use my Bitcoin, generate liquidity, and invest in other businesses? Absolutely, but that's not right now. And that's a key thing that I think we need to talk about. A lot of what I'm saying is about right now, right? Which is, again, a reason why it's important to subscribe, because this is an evolving conversation. This is a new baby asset. This is a evolving conversation, and this, you know, what I'm saying today may not be the answer that is around next year, or let alone 10 years from now. I guarantee you it won't be what it is in 10 years from now. So my perspective on borrowing against your Bitcoin, and since 2021, anyone who was listening to me on Clubhouse where you didn't know who I was, you didn't know my face, you didn't know anything, the first thing I said was borrowing against your Bitcoin is the stupidest thing that you can do at this point. And yet, people are addicted to being stupid. So what did they do? They gave their money to Celsius, they gave their money to BlockFi, thought they could borrow against it, generate a small yield, and do other shit with a Bitcoin, with an asset that's got a potential 85% dip in every bear market. So firstly, they didn't do it smartly enough. Secondly, the institutions that are around right now are not optimal. I don't care what anyone says. I don't care what anyone says, who the companies are. You don't have enough money to pay me to tell people that borrowing on your Bitcoin is a good idea at this point. You don't. I don't need sponsorships. I don't need any of that shit. So I'm not a podcast. It's just me and my camera trying to tell people to buy as much fucking Bitcoin as they can as quick as possible and hold on to it for 100 years. So I don't need that. You're not going to catch me by saying, oh, you should use this service at this point in the market to borrow against your Bitcoin, because I don't believe there is any service right now. And I believe institutional funds will figure out a way to do it in a much smarter way, and institutional businesses will do it in a much smarter way. That might go against the whole Bitcoin ethos and all this other stuff, and that's absolutely fine. I'm completely okay with that, because I believe that people holding on to their Bitcoin is more important than actually trying to get creative with it and then screwing themselves. I think that's much more important for the normal person, the normal family that's created some wealth and needs to figure out how to protect it. So the comparison that I used in 2021 was like this, right? Let's imagine that you own a property and you are going to rent out that property. And, you know, you invite 2 realtors that are going to come and rent this property out for you and do the management. And they both show up. One shows up, perfect, you're meeting at 10 a.m. One shows up at 9:59, shakes your hand, looks at you in the eye, is respectful to you, your family, looks at your property, takes a lot of in-depth time to study the property that you have, thinks about the market, gives you comparisons of what other properties he has rented, tells you exactly, you know, we're going to get you, for example, we're going to get you, you know, $1,000 a month for this property. And he does, you know, super professional, sharp suit, beautiful car. You can clearly tell he's about something, right? Okay, so he's gonna get you $1,000 a month. Then, about 45 minutes later, another car pulls up. Got a loud ass exhaust, shitty car. Guy jumps out. His shoes are all over. The shoes are a mess, not polished. Suit is all kind of messed up, like he's not even wearing a proper suit. You know, like all of that stuff. He walks up to you, barely shakes your hand like you're shaking a woman's hand, because he's just weak. You can tell he's probably on some cocaine because he's got a little bit of white stain over here. All of this stuff that goes on, right? His suit is all fumbled up, his tie is not even tied up properly. You know, without even stepping into the property, you know, is a bit jittery and tells you, hey, I'm gonna get you $1,080 a month for this property. Who are you giving your property to? Right? That's the question you need to ask. In fact, put it in the comments. Who are you giving your property to? Person number one or person number two? If you say person number two because you're going to make $80 a month more, or let's just say $100 a month more, you are the perfect candidate for getting completely screwed out of your Bitcoin. My parents, for example, when I was growing up, watching them rent out their property portfolio and everything else, would take less money from a person that looked trustworthy, right? Would take less of a return from the person that looked trustworthy rather than believe in the promises of the second person. And that's what I grew up knowing, and that's every single successful person has done that around me. And so I do that now. If I see someone and they're coming out with all this and all that, I'm passing immediately, right? And here's the difference. So how do we apply this to Bitcoin? BlockFi and Celsius is that second person. And people are taking an asset that generates an 80% CAGR a year and trying to do an 82.5% CAGR. You deserve to get fucked. Simple as that. It is not the right time to do this. The institutions are not backing this enough. Now, it might sound harsh me saying you deserve to get fucked, but it's just not common sense to pick that second person. And you trying to go, okay, instead of an 80% CAGR, I want to make an 82.5% CAGR because I can use that money to do X, Y, Z. You're just silly. You don't have a long-term mindset. You are just silly. And if you are greedy, you will see, your Bitcoin will be separated from you faster than you can blink. So it is not the right time right now to borrow against your Bitcoin. It is not. Right? We need to wait until the institutions show up like that first realtor. And they're not doing that right now. Everything is, oh, we have this token and that token and all this other bullshit. I will much rather borrow against my Bitcoin from BlackRock than I will BlockFi. And I don't care if BlackRock owns a piece of BlockFi or whatever the hell. I would much rather borrow it directly from my asset management team at BlackRock or Goldman Sachs, right? For example. So it is not the right time yet to do this. However, here's what I think is coming down the pipeline and where it may be right. And this is why I believe the ETF is extremely important. Because there is such a thing, some of you may not know that this is even possible, but if you own, for example, the S&P 500 Index Fund, SPY, you can take what's known as a stock loan against your share ownership of that S&P 500 Index Fund at pretty much Fed rates. Pretty much Fed rates, you can get a 50 to 70% loan to value, and it's completely safe, it's completely fine, it's completely regulated, it's doable right now. So what do you think makes more sense? Do you think it makes more sense for them to create new regulation, try and figure out how to do, loans against Bitcoin that people hold their private keys and all this other stuff from an institutional perspective? Or does it make more sense to say, if you want to take a loan, we'll give you preferential rates? For example, right now, last time I checked, Unchained Capital charges 12% to borrow against your Bitcoin, right? Well, when BlackRock comes along and says you put your ETF up as collateral and you're going to pay 3%, the incentives move straight to putting it into the ETF. Because if you understand finance at that level, you're not going to be paying the extra 9% because you understand that it is just a financial game. So the ETF is extremely important for this reason. And by the way, this is what keeps the US dollar alive. This is why BlackRock has jumped into this market, why Fidelity's in the market, why Vanguard will be in the market, why JP Morgan is now slowly turning around. Jamie Dimon came out and said, I think the SEC basically has to approve all these ETFs in Bitcoin, right? This is a guy who said, I don't care about Bitcoin. And he's now saying this. Why? Because as the value gets sucked into Bitcoin, what happens? Let's have a look at what happens in the financial system when you borrow against an asset. If I have $1 million of Bitcoin and I borrow $500,000 against that, that $500,000 gets sent to my bank account. The moment it is in my bank account, the bank can lend $20 million against that, right? They want liquidity generated from Bitcoin. I was speaking to Peter Dunworth, and he made a good point. The European banks now can custody crypto, and it makes sense because if a bank can custody your Bitcoin or one of your shitcoins, they can lend against that because it is a collateralized asset. So they can hold it, right? They can now lend against it based on the fractional reserve lending system. Now the question is, you know, what happens to market forces in order to keep that sustainable? Because there is a cost of carry on that Bitcoin, because they're not going to be just waiting for the 200-week moving average. And even if they do, for example, we were under the 200-week moving average for a few months in this bear market. So that you need someone, an institution big enough to fund that cost of carry for that period of time between the point at which Bitcoin breaks its 200-week moving average and the point at which it recaptures it. These are all things that need to be figured out, and I don't think they'll be figured out with hard custody of Bitcoin. I think it will be the ETFs. This is why the ETFs are important. If I have $1 billion, let's say I want to put $1 billion into Bitcoin, and let's say I understand finance, right? A sovereign wealth fund, something like that. I'm not doing it for the sovereignty aspect of it. I'm doing it for the wealth aspect of it. I'm going to use the ETF because I can put my money into that ETF and immediately borrow against it at Fed rates, have it backed up by BlackRock or Goldman Sachs or something like that. Don't need any of these, you know, companies that don't have proper custody solutions, don't have proper financial backing, et cetera, and then start using that capital. The beautiful thing for the banking system and why this will be incentivized in the banking system is, like I said, if I have $1 million and I want to take $500,000 against that on my Bitcoin, that 500 grand gets deposited into my bank account, recirculated in the banking system. The bank can now go ahead and lend out $20 million against that. So it is this circle of the incentives around using Bitcoin to shore up the US dollar and the banking system is coming to fruition at this point. There's going to be some Bitcoiners that just don't agree with this, and that's absolutely fine, and you can shout at the market all you want, but I like to follow the money and follow the incentives. There is a reason why BlackRock and all these people are trying to get into this ETF business, right? Because you can utilize the ETF to put as collateral. You can borrow against it, and start increasing balance sheets, etc., etc., etc. This is how it's always worked, by the way, right? If you have $100 million of prime real estate that your family has owned for generations, you don't sell that when you want to, I don't know, do another project. You go borrow against it, you put up the property as collateral, you borrow against it, and then you use the capital that you've borrowed in order to do the projects that you want to do. As long as you can generate a return higher than the interest rate, you're absolutely fine. So this is what I believe is the future of it. And what I will do is as follows. I will at some point, not right now, at some point, I will borrow against a portion of my Bitcoin to generate liquidity. And I will only do it when an institution that is reputable enough has come into the game. And we don't know when that's going to be. And again, another reason for people to subscribe, because this is an evolving conversation. So I will do that at some point. My metrics for doing that are as follows. I will borrow against 10% of the value of my Bitcoin, maybe 20%, at the 200-week moving average. That's it. That's my secret, right? 200-week moving average. Borrow against it at 10%. There is virtually no chance of being margin called on that. And of course, I won't be borrowing against my whole stack. It'll be in different places and through different vehicles. So including the ETF and the hard Bitcoin, which is why I've always said that, you know, I have the majority of my position in Bitcoin, but I also have exposure to GBTC because of the future that GBTC creates and these future opportunities. So while people are running around right now, and if you are one of these people who is basically trying to, you know, get as fast as possible to leveraging your Bitcoin, you deserve to lose it, because there is no institution right now that has come into play to make this safe, to make it properly safe and actually worthwhile. It's just not there. I don't care if you hate me. It's not there. I don't trust anyone. I don't trust anyone to borrow against my Bitcoin. I want to buy the Bitcoin. I want to shut the fuck up. I want to get fabulously wealthy. Once I do that, once the institutions are in place, then you can start thinking about borrowing against your Bitcoin. So what should you do now? Like, people ask me, like, how do you live off your Bitcoin? You fucking don't. You don't. It's the hardest asset humanity has ever created. You don't live off of it. You hold it. You bear hug it. Hug it like it's your child. Right now. That's what you got to do. So what is the things that people should be doing right now? Very simple. Figure out a way in this expansive world to create fiat opportunities for you and your family to have a good living experience for the next 10 years. I don't think there will be any proper worthwhile borrowing facilities against Bitcoin or the ETF when it gets approved at some point in the next year. I don't think there will be good borrowing opportunities for at least 5 years after that. So let's stick to 10 years, right? Just to err on the side of caution. After that point, by the way, and I know I'm saying 5 to 10 years, and it's not really that, because as soon as the ETF comes out, you plug that ETF straight into the stock loan programs that are already in existence for 100 years, and you're off and running. So it might be sooner, but play it safe. Plan for 10 years. Plan to buy Bitcoin and hold it and hug it for 10 years before you figure out what to do with it. But that is the strategy, my strategy. Wait, hold, accumulate, wait, and then I'll borrow 10 to 20% against my stack at the 200-week moving average. It's very, very simple. You don't want to get screwed over. What happened last time was people said, oh, why don't I just borrow against my Bitcoin now? I can borrow 50% against it, and then I can buy more Bitcoin with it, right? And then the Bitcoin price proceeded to drop by 55%, and you get margin called. It is not worth it at this point. Or the fucking company goes bankrupt, like what happened with Celsius and BlockFi. It is just not worth it. And the worst part about this is when they say, we can give you X return if you just want cash, or if you take the return that we're giving you in a token, then we'll give you X plus a percent. And people fell for it, especially with like Celsius and those other things. Like, if you take it in this, then we'll give you a, X return is mediocre. It's like going, okay, I'll give you, instead of that $1,100 versus 1,000, I'll give you, getting 1,000, I'll give you 1,100. But if you take it in this magical new piece of bullshit that we created, I'll give you 1,150. And people fell for it. Don't do that. Don't fall for this shit. It is not time yet to do that. Wait until the ETF, put some work into your life, and figure out how to create fiat opportunities. I'll tell you right now, I create fiat opportunities in my world because for 17, 18 years almost, my world has been investing. So I use strategies in the markets to generate fiat liquidity events in the short term, short, small fiat liquidity events, because that's what I have specialized in my career. Other people are doctors, right? Like Jeff Ross, for example. Great guy. He's a radiologist. He needs to keep being a radiologist and generating fiat liquidity so he can hug his Bitcoin as tight as possible. That's what's extremely important. Create value in the world. Stop being lazy. Stop being arrogant. Stop thinking that just because you own Bitcoin in 2023, your life is fixed. Stop that. Plan to hold it until 2033, until anything, until you do anything with it. Figure out how to create liquidity events in the short term, fiat liquidity events, and then there will, by 2033, there will be opportunities that are reliable, stable, safe, and secure, and fully regulated for you to borrow against Bitcoin one way or another. By the way, I can completely see somebody like BlackRock saying, oh, you own, let's say you own 500 Bitcoin, someone that's super wealthy, you own 500 Bitcoin, you want to borrow against it? Cool. If you want to borrow against the actual hard Bitcoin, it's going to cost you 12%. If you transfer that Bitcoin into the ETF, it's going to cost you 3%. I can completely see that. And that is good. That's how it always works. That is going to incentivize people to push the Bitcoin into the ETF and borrow against it at a 3% rate. And by the way, a lot of people will do that because that 3% borrowing can allow them to do many, many different things rather than paying the extra 9% on the interest versus the hard Bitcoin. I don't think that the hard Bitcoin lending market is going to be as big as what people think it's going to be, because you've got custody issues, you've got regulatory issues, you got all these issues. It's easy for me to custody an ETF because it's fully regulated across the entire chain and the systems are already there. Human beings always move towards the easiest thing, and the easiest thing that we have is you buy the ETF, you hand it over as collateral, you take a stock loan against it. Every single point of that chain is fully regulated, and there's 100 years of experience to back that up. There is not 100 years of experience to figure out how do we custody Bitcoin. Do we have a key? Do they have a key? Who else has a key? The lawyers have a key. What if they move it before we want them to move it, or before the term is up? What happens here? All this other bullshit, right? And then on top of that, I got to charge them 12%. It's much easier to follow the incentives and go towards the easiest path. The easiest path will be the ETF. You borrow against it, borrow against the ETF, the money gets deposited into your bank account. You then, get the banking system can expand, and I can do what I want with the capital, and I can do it at market rates. It just makes the most amount of sense to me. There will definitely be people that find this way too complicated, and they'll borrow. The people that I know that borrow against their Bitcoin now, they ain't doing their whole stack, right? They're going against and borrowing against 5% of their stack just to see how it works. You really telling me? Hold on, let's get this really straight. Let's have an honest conversation, right? You trust anyone with putting 100% of your stack up? Do you really? You really trust anyone? If you're a Bitcoiner and you understand the benefits of having a bearer instrument asset, you're telling me, I don't care who it is, whether it's Unchained Capital, Jack Muller's, whoever, right? Jack Muller's is not in that business, but I'm just using it as an example. Michael Saylor, a very public figure, a supporter of Bitcoin. You telling me you trust them with 100% of your stack? You telling me that? I don't think so. I don't think so, because the regulation is not there. The security is not there. These people are doing it just to see what happens, and then even when they do it, they got to shit themselves every day just in case they get a margin call. Trust me, when these lending products actually come into the market, it's going to be a different story. It's going to be BlackRock, Goldman Sachs, et cetera, coming in and saying, put your Bitcoin into the ETF, we'll loan it to you, 40% LTV at a 3% interest rate. Locked for 3 years, because we have the capital and financial backing to actually carry the cost of Bitcoin going down, because we understand what the asset is finally. That's the way that I think this plays out. I think there will be a market to borrow against Bitcoin for sure. I think that will definitely happen. I just don't think it's going to be as big as what everyone thinks. And people's idea of, okay, well, does this allow the banking system to expand? Yes, but it's easiest to do that by just using the ETF. Because the smaller holders of Bitcoin are never going to do anything like this, because they're not even thinking about this. Only once you have, a few $1 million of wealth do you even start thinking about creative finance options. Otherwise, it's just easier just to sell the Bitcoin. It's important to think about this with Bitcoin, even if you don't have a few $1 million, because it is the hardest asset on earth. And you're not going to get a chance to get it back in 10 years. So that's what I wanted to leave you with today. I get this question so much. I want to know how you're going to borrow against Bitcoin. Don't. That's the answer. Don't. Focus on creating value in the world. Focus on generating fiat events in the world by creating value for the rest of the world and hugging your Bitcoin as tight as you can. Because ultimately, while this is an evolving conversation, you should subscribe because it might change tomorrow. There are only 3 rules to Bitcoin. It's step number 1, you buy Bitcoin. Step number 2, you shut the fuck up. And step number 3, you get fabulously wealthy.